Hey guys, Rory Cummins here, sending out a quick video on short-term rental financing. I get hit up all the time from people that want to get into this game. They want to own property. They want to, get on the Airbnb and VRBO platforms and start making some money. But capital is always the issue, right? They either feel like they don't have the money to do it, or they don't. They can't make the numbers work to, maybe the house or property or whatever needs renovation. Maybe they don't know where to find the money, right? Like they don't know the loan types and everything. So I'm going to bundle this whole video up really quick into going into the different aspects of it, and then talk a little bit about creative ways to do these deals so that you can then eliminate what other, self-limiting beliefs or stories that you have around why you can't do it. So I've been in this game for a long time. I'm just going to share what we have done, me and my business partner, over the years, and ways that you might be able to do this as well. So number one, obviously if you have your own capital for the down payment and potentially any renovation money, great. You probably can skip this video. But I do want to add some value as well with creative ways that you can try to retain some of that capital. So number one, your standard loan on buying a short-term rental is probably going to be a 20 or 25% down payment. That's typical for an investor loan. There are second home loans out there that you can get that would be a 10% down. There's parameters behind that. You'll want to check with your lender on the details. I do know a lot of people that do use that as a strategy. It's a lot easier to come in with 10% down on a property than it is to put 20 or 25%, thereby saving you capital that you can then use to update the property, right? Another way to do it though is to go with a commercial loan. Commercial lenders are great because they will be a little easier on underwriting the property to run the numbers to make you qualify, but most importantly, you can usually roll in the renovation money right into your loan. So I'm going to give you an example. You buy a property or a house, whatever, for $500,000. You could basically take 50 grand from the bank as a renovation or construction loan and roll that 50,000 into the $500,000 purchase, and only put 20 or 25% down total of everything you're borrowing. So maybe it's 100 grand for the down payment, it's 20%, and then of the 50K, that would be 10%, right? Or I'm sorry, $10,000 of the 20%. So you would only have to come to the table with 110, but you'd have, that balance of money that you could then use for renovation with a commercial lender. A lot of people don't realize you can do that. Like we've done that successfully on many, many properties because, as you know, you want to add value when you buy a short-term rental. You want to add amenities in the property, whether it's a pool or a hot tub or whatever you do on the inside to spruce it up. So this takes money, as does all the furniture that you might need to buy. So it can really lessen the amount of capital you may need to get the deal done. Now, if I said nothing else, that's just two basic ways that you can tackle and lessen the amount of capital you might need depending on which way you go. But for those of you who don't have any money or very little money to put towards a purchase, let's talk about partnering and let's talk about bringing in investors, okay? If you understand the numbers and you understand the industry of short-term rental, you don't need to be an expert per se, and you don't have to already own 5 or 10 homes. You just need to know enough to have an intelligent conversation with somebody and teach them what they need to know about the investment. And what I mean by that is you have friends, you have family, you have business partners, colleagues, whatever, that probably want to get into this game as well. They may not want to manage it. They may not want to build a portfolio. They just want to own something, right? They would be a great potential partner or passive investor that you could combine forces with, bring their capital to the table, and either bring none of your capital or a portion of your capital, and then combine that capital with the bank. So as an example, if you did a 50-50 partnership, you just find somebody that wants to partner with you 50-50, and maybe you do all the work and they just bring all the money, and maybe they're only bringing 20 or 25% of that down payment with the bank. Commercial lenders don't care if you partner up. So you could basically just combine forces, or even on a traditional loan, investment loan with conventional, you could do that as well. So that's an easy way to do it. Not everybody wants to partner, but if it's a great way to get your foot in the door, get the portfolio growing, and start acquiring properties. Another way is just to raise investing capital. Without going into the specifics there, just to make it super clean and easy, when you have a partnership, it's similar in the investment space with investors. The main difference would be you could bring in multiple investors, and those investors may be equity partners or debt partners. The difference is a debt partner just wants a return on their money. Hey, here's $100,000 to go buy that $500,000 home. Just give me 10% of my money every month. I want to guarantee 10%. So they would be on the hook for that amount of money of interest, right? Or you would be on the hook for that. But if you had an equity partner, they're taking the risk with you on the property, right? So they just want a portion of the equity performance of the property as you pay down the loan, or I would say or the profits, right? So let's say you're making $1,000 a month on that property every month, and maybe they get 30% of the profit, and they're getting the equity pay down as you pay off that loan with them. That would be considered an equity partner. Now, if the property didn't make money, you don't owe them anything, right? They're taking they have a higher chance to make more money typically as an equity partner because they're taking the risk with you, but they're trying to get the reward out of it. Whereas a debt partner could just come in and supply you the capital. They just want a flat return. So they may not want any of the equity of the property or the profits. They just want their flat return. Now, when you do those deals, you want to make sure that you're securing the real estate, the property, with them, so that if, God forbid, you had a default on something, that they have an equity stake in the property if it has to get forced to sell, so that it protects their money in the deal. I don't want to make an hour-long video about all this. I want to just plant some seeds with you guys that there are many ways that you can jump into this game without bringing your own capital to the table. You just need to get yourself to a place where you can speak intelligently about it and know enough about what you're getting yourself into to navigate the waters within the investment space of the short-term rental property that you're looking at, right? So if you know the numbers, you know the market, you know what you're doing, people will want to invest with you. If you don't know what you're doing, I would suggest backtracking and keep educating yourself to the point where you feel comfortable doing a deal. But it's really a confidence game. Sometimes you just got to put yourself out there and have these conversations with people, and you'd be surprised how many people would be more than willing to partner up with you and supply 100% of that money that you need to get a deal done. So hopefully this opened up some self-limiting beliefs you might have around not having the money or whatever story you might be telling yourself. I've done these for many, many years. I've done them on flips. I've done them on short-term rentals. I've done them on apartment deals for multifamily. This stuff is out there, and not a lot of people will even take advantage of it with opportunity. So hopefully this helped, and if you guys have any questions, please let me know. If you want to subscribe, I'm going to be putting out more of this content on a regular basis, so stick with me, and hope you guys see you in the channel. See ya.